And why is that? Where is the inclusion?
Yeah.
Where is the financial inclusion? Where is the democratization? How are the mass affluent and the retail eventually going to have access to this toolkit?
Hey everybody, welcome back to WealthTech UnWrapped. I got a guest on this week that I could talk to all day because it's about stock exchanges. So before I built Bamboo, I used to build stock exchanges, and they are the most fascinating, complex, challenging things to build. I mean, you use them every day, right? Well, not every day. You use them a lot because your portfolio has stocks and ETFs and funds and bonds. But building a new exchange is just crazy hard because the way you get people to trade on an exchange is by having people trade on the exchange. How do you get people to trade on an exchange? By having people. So liquidity gets liquidity. It's a never-ending circle. And I've tried it twice in my career, and it's been a challenge. Today, we have the CEO of ADDX on, and it's a cool conversation because it's partly on the blockchain, and it's interesting to talk about that. But it's also like exchanges need to change. They're inherently inefficient. And when you think about your wealth, when we talk about wealth tech, you lose money to the way that exchanges and clearing and the infrastructure works because money comes out of it in clearing fees and exchange fees. But they've been there for so long. It's just what they are. So I think this industry is going to change. I've tried. It's just a fascinating part of the wealth cycle. Wealth's crazy complex. I mean, if it was simple, maybe Bamboo wouldn't exist because everybody could just trade and invest. We help people save for their goals, but obviously you've got to be able to trade the product. So I hope you enjoy this conversation. I think you'll hear that, we're both really kind of into it. We understand it. Having built exchanges, it's an area I know super well. And I still think it's an area that there's a massive amount to move forward. We can fundamentally change this. So, and yeah, look, I'm interested to talk to more people in this space and kind of understand, other people's views on it, because wealth tech isn't just about the bit that we build, it's about all the other areas of wealth as well. So enjoy the conversation. We'll see you on the other side. All right. Hey, everybody. Welcome back to episode 60-something of WealthTech UnWrapped. And we have a guest. I think we can end up talking all day because I used to work in exchanges. You're running one of the,
Yes.
I don't want to say the best, the most prominent, the well-funded exchange. But Oi-Yee, welcome to the show. How are you?
Thank you. I'm good. Glad to be with you this afternoon. As I mentioned, this is a new experience doing a live discussion right here in your studio.
I must admit, we've always done podcasts on Zoom, like you said, right?
Yeah.
But we've had this room, and then I'm a Joe Rogan fan, which I keep mentioning. And he started getting it into a studio, and then I realized people watch podcasts. I don't know do you actually watch podcasts or do you listen?
No. Well, I put it in the car when
Yeah.
I'm driving and I listen to it.
Yeah.
So I don't, but it would be quite interesting to watch one.
Apparently it's all the trend these days, so we're doing it. But yeah, look, I mean, I think I would love to understand. I mean, what we say with guests is, I love this idea is, why do you do what you do, right? Which I know is a big
Yeah.
question.
Yeah.
You've been in financial services a long time. It'd be great to hear a bit about that, and then we can talk all day about ADDX and actually, because it used to be called iStocks, right?
Yes, yes, and we can talk all about that.
So maybe a little bit of background.
Right. So, similar to you, I've been in traditional institutions, and I actually started out in investment banking.
Mm.
And very early on, when I worked at Citi, one of the biggest, most interesting trend that I saw or worked on was the REIT evolution or the REIT revolution.
The real estate investment trusts.
Real estate and investment trust was something that Singapore Inc. was very focused on. And they they looked at Japan, which was also building its own rules. They looked at Australia, which had a REIT regulation for a long time. The US has actually had REIT legislation for.
But they don't call it
number of
REITs, right?
years.
They call it something.
Yeah, so Australia was LPTs,
Okay.
Limited Property Trust,
Okay.
and the US was called REITs.
Okay.
And in Singapore, we were developing that to create, or take institutional real estate and democratize that.
Okay.
So the simplest way that I would explain that. And we saw this sector sort of explode, right? Because actually for individual investors, they were never able to buy a piece of an office building.
Yeah, you just can't buy it.
You just can't buy it,
You can't
right?
buy it. Yeah.
And so when we started, we were thinking, how big is this space going to be?
Huh.
We don't know, maybe a bit of retail, and somebody actually said, look, in the US, it's about 5 to 8% of the market cap in the US at that time. And we're like,
Wow.
wow,
That's a
that's
lot.
quite big. It's now gone beyond that in
Yeah.
Singapore. I think it's closer to sort of 10 to 15%.
In Singapore.
In Singapore.
Wow.
And it was quite interesting. I saw the formation of the rules. I saw the launches of the first few REIT IPOs. I was on actually as a banker on one of the earlier ones, and it created a new asset class, which actually helped to create wealth.
Yeah.
Right, and individuals then had a portfolio where it was diversified. They had yield. They could express it in different manners, and that to me was great to watch. Right, the innovation there. So, but within that 20 years that this product has been in place, actually, there's not been a great product revolution.
Yeah.
Right. And the public markets were all going through a certain sort of passive versus active, what was happening there. The private market started to grow within sovereign wealth funds. So
Mhm.
it didn't used to be a big part of their portfolio, but increasingly, I think the larger sort of wealth institutions, sovereign wealth funds or insurance companies started to look at private markets as an asset class they needed to focus on for
Right, yeah.
obviously many reasons, diversification, etc. And when I was at UBS, and UBS obviously is one of the biggest wealth managers in the world, and from the investment banking lens, I could see the evolution that the wealth within UBS was also starting to shift. They were taking more and more positions in private market assets
Okay, themselves, proprietary positions.
themselves.
Yeah.
They were looking at what we call direct. So UBS became a place where the clients could then look at investments like Grab,
Yeah.
pre-IPO,
Yeah.
or other large pre-IPO unicorns, right? That was very exciting. And what was quite interesting is I observed that it was still limited to family offices, very ultra high
Yeah.
net worth, because there was no technological solution for that.
And I think this has always been the problem, right? Wealth, there's always been this inverse relationship. The more money you have, the more access you have.
Exactly.
And the more advice you get, the less money you have. You actually need more access and more advice, but you can't get it.
That's exactly right. So it
Crazy.
used to drive me mad, right? Because as an advisor, you tell a ultra high
Yeah.
net worth client, hey, you should have X% allocated to private markets. And this is how you do it, right? But you don't really say that to the smaller guy. So it got me really thinking, why is that? Where is the inclusion?
Yeah.
Where is the financial inclusion? Where's the democratization? How are the mass affluent and the retail eventually going to have access to this toolkit?
It's a balancing act, because I respect the MAS's view that, there's the accredited investor, and I understand that, absolutely. But also, you want to give people access. And I understand it's a tough balancing act.
Yes.
That's why I think REITs were actually like super innovative, because they're saying, look, you can own a piece of Suntec or a great building. It's Singapore Inc. to a degree, and you're going to get 6, 7, 8% yields. I remember when the first time I saw a REIT, I was like, I can get like 7%, whatever the percentage was.
Yeah.
It felt like almost a magical product.
Yes.
And it was quite magical.
Yes.
And, but you're right, that's maybe an easier asset class because it's clear what it is. But overall, private markets haven't been democratized.
Well, and it really, because technology has stayed relatively stagnant over time, right?
Yeah.
If you think about the exchanges, the exchange technology as it existed, as you well know, started in the 60s, 70s.
Yeah. Yeah.
And the ecosystem was built over time, a bit in a Frankensteinian way, right? You kind of have the exchange, and you have the broker system, and you have depositories, and these haven't really revolutionized at all.
But partly because exchanges, and we can go down a whole rabbit hole, were monopolies, right? When you're a monopoly, when I was at Chi-X before we, colleague that we both know, they had a phrase that said, when Chi-X launched, 10 times faster, 10 times cheaper. They didn't say than the LSE, but what they were saying was, we're 10 times faster than the incumbent. And their message was, the incumbent can be slow and expensive because it's the only one. Yeah. So exchanges have been under this. But it's hard to build as you know, it's hard to build an exchange as well, right?
It's very, very hard. And regulatory constraints and all of that. Private markets is even more complex, right? If you think about an exchange, an exchange handles a relatively homogeneous product, right? A stock is a stock, and you kind of split the corporate action piece from the trading of the stock itself. So if you look at private markets, why private markets have stayed illiquid and stayed relatively in the hands of the elite are really because it's very bespoke. There are many different structures.
Yeah.
And there are many sort of corporate actions or sort of what we call the asset servicing is quite complex.
Yeah.
Like a 5-year fund or a 10-year fund or a PE fund, different rules, different management fees, different. So it probably is the reason why for this many years, and it never been such a big allocation before. So nobody really thought of it. You don't need that much technology to solve for 20 LPs that are giving you 100 million, right? Because they're just going to sit there for 10 years
Correct.
and not going to bother you. But is that fair? Is that the way to go? The answer is probably not. And so when iStocks came to me with this idea that technology can help facilitate change that, and that really sort of blew my mind, right? It's like, okay, what is this blockchain? What is blockchain? Why is it so powerful? What on earth are we doing that would then open up potentially a massive toolkit for individual investors, currently mass affluent, but mass affluent, to think about how do they then enrich their current portfolio, which is, let's say, for example, currently in stocks and maybe somewhat in bonds.
Yeah, but I think it's over the years, it's always been clear, diversify your portfolio, but in reality, you're buying an ETF, a mutual fund, a stock. And the idea of, oh, maybe you would back a private asset, it's always, oh, no, it's for other people, right? It's whether it's 100 million or 10 million or whatever. But I think it's this interesting one because it's so much harder to understand a private asset, right? Because there just isn't research on it and it isn't as clear and understandable. And so, when you started at, was it iStocks when you started, or was it already called AD?
It was iStocks.
It was iStocks, okay. And is it the vision that everybody should have access, or because it's got to trickle down from somebody with 100 million, 10 million, 1 million? Because now, I can buy stocks for 1 cent, right? With fractional stock trading, I can buy a $1 of Apple.
Yeah.
It's completely democratized. Is that where it's going, or is that a step too far?
I think that it will get there.
Okay.
But there are a few problems we have to solve.
Okay.
But our vision is to democratize private markets.
Okay.
Democratize.
Yep. That means everybody.
That means everybody.
That
That's
means
exactly
everybody.
right. That's exactly right. So we think the technology today exists to service that.
Yep.
I think there are many parts of the ecosystem that need to shift, regulations and things like that. And I think at the end of the day, for retail to fully participate in private markets, I do think the liquidity piece becomes important.
Yeah.
And which comes to the sort of where we try to solve it. And in reality, for individual investors, what do they need? They need access. They need to size the portfolio, and they need liquidity. Because if you think about it, today there's no aggregation of the small investor, and so for the GPs and the fund managers, they're like, I don't have the infrastructure to deal with.
They can't take $10.
$500, $10,000 guys, let
Correct.
alone retail, right?
But the equity market has done that. So your individual retail investor is like, well, look, I can do it in the public markets. Why can't I do it in the private? And I understand why they can't, right?
Yes.
But it has to go there, because you're right. Like today, if I ran a fund for $1 billion, I don't want to take in $100, $10,000. It doesn't make any difference, right? But maybe that's the real opportunity.
So I think there has been quite a big step change, I would say, in the last sort of 3 to 5 years. And I do see fund managers thinking about alternatives moving towards retail. Not into retail yet, but towards. Part of that is the allocation for alternatives within the large institutional capital are kind of reaching its theoretical high, right? Or theoretical
10%?
maximum.
Is it more?
No, I think it's sort of 30%. I mean,
Really? So
I think
institutional?
Temasek has hit this last announcement probably 40+%.
Okay, that's a huge amount.
That's a huge amount. And increasingly, we see fund managers thinking about alternatives being democratized, right? So there is a wave towards that as well. The second part about alternatives is, again, because of the individual. Let's say you are a 10 million net worth person, which is quite wealthy. The allocation to alternatives is, let's say, 2 million, right? There is a limit to the number of closed-end funds of tenure that you can invest in,
Yep.
because you just end up in such an illiquid position. What would happen if you need to exit? So sizing down to
Mhm.
the appropriate ticket size becomes
Yep.
important. Liquidity becomes an important factor. And we don't take it, we're not saying, look, we're, high frequency trading, we've got tons of volume. That's certainly not we propose.
Yep.
What we're proposing, we're taking from zero today
Mhm.
to, let's say, 20 to 40%,
Mm.
right? Of
That's
in the
still a big
range
step.
of
That's
liquidity.
yeah.
And maybe there's a discount, but at least there's a marketplace. So I don't know if you've ever bought into a private equity fund and tried to
I
either
have.
sell it or
I
monetize it.
have. It's not easy.
It is not easy.
But it's like, so maybe, and just to take a step back, so just when you think about ADDX, what does ADDX stand for?
Well, it's actually ADDX.
Oh, it's ADDX.
So it's
Okay, I was gonna-
ad
Oh, it's
exchange, right?
ADDX.
So yeah,
Thank you
so
for
the
letting
idea
me
of
know.
ad and exchange. The original name, iStocks,
Yes.
was a nod to our founder ICH,
Yep.
which is our holding company, and STO, a security token offering
Okay.
exchange. Right, that was the original idea.
Yep.
We began to sort of see tokenization as a digitization of securities, and we slightly wanted to divorce the conversation of cryptocurrencies and
Yeah.
distributed ledger versus what is the blockchain doing for private markets.
Okay.
So ADDX became an expression of that. I think we also wanted to we had launched the app version as well. So there was a whole big refresh.
Understood.
And it was a bigger reach, because for the average investor, they don't go around asking SGX, hey, what's your technology, sort of behind the exchange. All they want to know is, we want to be able to invest in a safe environment, licensed,
Yep.
and I'm going to get my money back, and I'm going to be able to, execute as you say it would be executed.
Absolutely.
That's all investors care about. They want to
Correct.
make money, full
Correct.
stop.
Correct.
Right? The idea of tokenization just presents them a different set of wealth toolkit, as I call it. And so that's why the shift towards ADDX, I think we'll continue to stay very focused with that, with our direct to consumer sort of part of the business.
So as mentioned before, we were chatting before, in the coulda, shoulda, woulda, I kind of built a blockchain exchange 7-8 years ago. Nobody would invest, so I left it, which was, that's life. And so this is a question I have. And again, so I'm both a believer in blockchain and a disbeliever. I'm both. Because partly it's emotional for me, because, I could have been doing it. What's stopping? So when you, clearly tokenization, I get it, right? Like giving people the ability to own a fraction of something, have liquidity in it. But what's stopping current technology from doing that? So why couldn't we do that today? And how does blockchain make that better?
I think, first of all, nobody really thought about solving for the mass affluent or the retail. I think that's the first
They just
thing.
didn't think about doing it, right?
They didn't think about it, or they didn't bother to. But then, as it turns out, I suspect it's a confluence of two things. It's a confluence of the growth of the private markets, as well as suddenly blockchain became a very neat solution for that. And when I talk about blockchain, and we come from the regulated part of the business, right? We don't come from the cryptocurrency side where it's unregulated, you beg for forgiveness. We come from regulated securities. How do we, and we constantly think about the compliance layer.
Good. And
the regulatory
100% you should, because that's the long game.
Yes.
The short game is, let's just launch a coin and see what happens. That's the short game. The long game is you do it right. And it might take longer, but that's the long game. That's the right way to do it.
So we split slightly from the purists. So we took what was the neat stuff about Ethereum, for example, right? We repurposed that into a private permission chain. And then we layered on the thinking around, what do we need for compliance? What do we need for post-asset servicing? What do we need for onboarding, KYC?
So you thought about it as a real exchange built on top of blockchain rather than blockchain building something. You thought about it. Okay.
That's exactly. What business problem are we really solving? What's the marketplace we're solving for? I think is sort of that. That's our approach. So we may look a little bit more fuddy-duddy and the cool guys are hanging around at Token 2049, but
honestly, I'm not just saying it, that's going to last the test of time. The dot-com boom and bust. There was all the cool kids building all types of stuff. And good companies came out, not many, but whether it's Google's or PayPal's or whatever. I think out of this current, like I went to token 2049. I don't know if you went. I mean, I don't even know what to think, but there is no doubt out of that room comes some great use cases.
Yes.
Probably not many,
Yes.
but
and so when you think about ADDX, what's that long term? Maybe so. How long has it been around? Like
It's been around for 5
5 years.
years,
Yeah,
but we actually only got out of the sandbox in 2020.
and you've done great since then. You've raised
We're a COVID baby.
you've done well as a COVID baby. You've raised some good money, right?
We have, and what's quite interesting is because we come from the regulated perspective.
Yep.
The investor base that sits on our cap table tend to be traditional exchanges.
Yeah, right.
And traditional securities and financial institutions. The two trends I see with that, one is they want to explore the applicability of blockchain within financial services.
So they're doing it as a bet. They can see what you do, and maybe they can use it internally, right?
Yes, or they want to understand the concepts behind it.
Yeah.
And instead of, well, the three choices you make, right? Buy, build, partner. And at the moment, there are not many established enough to buy. Build is too painful because can you keep a bunch of developers and you're competing with the crypto exchanges for the same talent?
Super hard.
Or partner, right? With somebody who has done that before. So there is a blockchain applicability piece, then there is the private market piece. And where we see globally, if you see some of the early partnerships and adoption of blockchain, it's actually the exchanges.
Yeah.
So we have Stock Exchange of Singapore and Stock Exchange of Thailand, but LSE, NYSE, NASDAQ is trying to sound cool at the moment by sort of talking about blockchain. But Tokyo, Osaka, all of them 6 have some experimentation or investment or have done something in the blockchain space as proof of concepts. How do they?
I mean, the simplest use case is T+0 settlement, right? Like that's the simplest use case in the world. Like, and again, I hate to be looking backwards. That's what I built my business plan on 7 years ago. I'm like, guys, T+3 makes no sense. You have to go T+0. If you have no middleman, you're exchanging. And honestly, like even though today I definitely have my questions about blockchain. I remember I wrote this piece. I was like, so you take out the middleman and you exchange it in the middle. That's the biggest friction point of exchange is taken away immediately, right?
Yes, and you cannot get me started on this. I mean,
I could talk all day on T+0.
Which is why I say a lot to people, you cannot unsee the efficiency of blockchain. You just cannot unsee it.
You've honestly, because people know I'm generally a skeptic. This is the one bit that I'm not a skeptic about. T+0, because let's face it, exchanges are not efficient today. They're monopolistic because they can charge money. Why is Hong Kong Exchange one of the most profitable businesses in the world? Margin, when I worked for Chi-X, I was out competing with HK. So I was Singapore sponsored to compete, and I was with Magnus, rest his soul, but I was with Magnus when he was trying to, when he bid for the ASX and the whole thing. So I've seen exchanges inside. And you look at some of the margins. Hong Kong Exchange has like 70% margin.
Yeah.
That's not right. I'm not saying it's not right, but that's amazing. It's because exchanges inherently have a monopolistic grasp on an essential part of our lives, which is creating wealth. And there's all these layers. You take away all that muddle layer, it's going to suck for exchanges, but it's good for the end user.
Well, I think exchanges are exploring that in part because they can probably keep this part, but the efficiency piece, I mean, if you think about blockchain and smart contracts, which I think is also the appeal and why we think it's the way forward, is the idea of layering on, and it could be a combination. It doesn't have to be all smart contracts. We all know what it can do and cannot do, and whether it slows down or not slows down. But also the layer of the microservices that you can build in to manage a platform that is end-to-end, from the issuance to the trading to the post-asset servicing to the redemption, and all of that happens with code, right? And it simplifies the operational complexities of it. Because some of these things are relatively simple. I mean, whether it is a coupon payment or a distribution payment, the logic is the same, right? So, there may be some tweaks to the sort of computation, but the logic is the same.
The logic's the same, right? To make it work.
Yes. So the idea of DVP, the idea that you take away the word, what does the word clearing even mean if blockchain is expressed in its full form?
But so maybe to play the devil's advocate, right? surely if you're a clearing, not you, but if somebody's a clearing company, you're petrified of blockchain because it's going to take all your profit away because there's so much profit in inefficiency. And again, look, I worked in exchanges. I love exchanges, but there's inefficiency. Someone comes like, yeah, I can take all that away and charge not zero, but charge less. You're like, oh, there goes my hundreds of millions of revenue. I mean, is that, I mean, inherently
That's
clearing may go away, right?
That's where we think the clearinghouses need to take a real hard look at business models. And it's quite interesting because what's right now, um, the incumbency shift is very tough
Yeah.
because everyone's built, as I mentioned, right? If you look at the old exchange model,
Mm.
the brokers and the exchange, which is basically the matching engine, have created decades of commercial and technological relationships. It's quite hard to undo that.
Super hard.
In a day, probably will
Super
take a
hard.
decade.
Super hard.
Similar for bonds, similar
Correct.
for whether it's sort of traditional clearing, traditional custodians. This will take a while to shift, right? Because that technological shift is not easy and not immediate. But where we see that is what's quite interesting is we see that we innovate at the B2C level.
Yeah, okay.
And because the consumer makes a very simple choice. They like your platform, you have the products that they want, and they can execute this.
Yep.
And they, don't mind the idea of pre-funding it just to get everything
Yep.
settled, because
Yep.
then they don't have to worry
Yep.
about settlement risk,
Yep.
counterparty risk.
Yep.
Right? So execute that, get done, decide, like it, not like it, repeat, whatever that is. Build a portfolio, whatever that is. Then the question is sort of, you think, could that be moving away from the B2C? How do you then get the institutions to think
Yep.
much harder about adopting all of this? Because do we at the end of the day want a far more efficient capital markets? Now, once that starts to happen, what's quite interesting is the question becomes the graduation of public markets to private markets.
Sure.
Become very interesting topic of discussion.
Because now they're very separate, right? Now it's very separate, right? It's super hard for private markets. It's high net worth. It's hard to get in the process. Whereas public markets have become easier, way more accessible. From the Robin Hood generation and people accessing, and then even again in the crypto world, people can do it quickly. Private markets is still this difficult world to get into. But you're right. Like I think it's almost inevitable. Like every industry, whether it's television that's gone from scheduled TV to streaming, and every industry's had this kind of sea change.
Yes.
As part of it. And I think the public markets have gone through that, looking at, zero commissions and, instant trading, and that comes with negatives as well.
Yeah.
But I think you're right. But I think, would it be said, I think you just mentioned, it's like is it a decade before it gets there?
Yes.
Or is that too long?
Well, I just think, I say a decade because I throw this out.
Sure.
And,
it's an easy number. It's
might
better than like
retire by then.
9.32 years.
Yeah,
It's hard
yeah.
to know.
But what is quite fascinating with tokenization and with blockchain is the I would have thought in 2020, and I tell this story a lot, when we came out and we talked about tokenization, I felt like we had to stop talking about tokenization because it would frighten a lot of.
Okay.
It's a frightening word because
People
there's so
don't know
much
what it is.
connotations of crypto and all of that. But from a span of 2020 to 2022, and because we're sort of very involved in this space, we see now a whole class of financial institutions who are at sort of some level adopting blockchain, at most level exploring it.
Yeah.
So some
Crypto
global
curious
guys.
or blockchain curious, right?
Well, blockchain curious. JP Morgan's put a
Sure.
lot of money and
I saw.
resources into Onyx and what they do out there.
Sure.
You see DBS leading the charge
Yes.
around even crypto and blockchain.
Yeah.
In fact, Piyush himself says he thinks that all financial assets will be tokenized, right?
I respect Piyush incredibly deeply, but I was like, I don't believe
Well,
it.
we'll
But-
send you BCG reports and
Absolutely.
Bain reports that's going to prove you.
Yeah, but BCG are paid to say that. With all respect to BCG, but it's interesting. I saw this little thing the other day. All DeFi crypto companies want to be banks now, and all banks want to be crypto DeFi companies, right? So that's what you talk about, the crossover, right?
Yes, the
because I think
convergence.
from Jamie Dimon's 4 or 5 years ago, blockchain, crypto is, he made a pretty, I don't want to paraphrase, but he made a pretty clear statement 4 or 5 years ago that Bitcoin was, not not good, 0 out of 10, to this where you say today, correct. And I think that's what you see, whether it's BlackRock partnering with Coinbase and all these different things happening, that institutional recognition
Mm.
means that I still think we'll have a lot of projects that won't live up to what it is. But I think it's very clear when you get even your backers, right? You've got backers that are as
Yes.
long term as it comes. There's clearly some really transformational text
Well,
going to
I
come.
mean, we have UOB as partners and shareholders. We have Tokai from Japan, Hanwha from Korea. It's not just about Singapore and its sandbox. It is a regional appreciation for what's happening in this space.
Mm.
And it's very fascinating to see. So different banks have different projects, and we actually think, and in a very short span of time, as I said,
Yeah.
2020 to 2022, and everyone's sort of figuring out what's next. I mean, I was at Digital Asset Week, and we had
Yeah.
Citi on a panel, we
Yeah.
had HSBC on a
I know.
panel, and everyone has got a large innovation team. For most part, exploring what blockchain is going to do to either complement or disrupt them.
Yep.
So we watch this space with a lot of interest. We think there will be some convergence of sorts. We think that you could see a world where either the world decides you can figure out regulated on DeFi, or you could create a imagination of DeFi of the TradFi world. Right?
Just this idea that it's called TradFi. For a while, I didn't even know what it meant. And somebody said to me, it means old people. I'm like, no, that's not fair. That seems unfair. But it's traditional finance. But what's happening is traditional finance and decentralized finance is merging, and it's like this cautious approach. They kind of like, there's definitely like, really, how, why? But you can see it's now closer. I remember going to see, when the ICO boom came, you could just tell that was rubbish, right? You were like, hold on, come on, really? And there was no sensible person from a bank there. But right now, people are being, okay, let's see how this works. And I think it's genuinely, look, you don't get funded by, people from Tokai and UOB unless there's really clearly something happening there.
Yeah.
So, but how many people do you have at ADDX?
We have about 120.
Wow. All in Singapore?
All in Singapore.
How do you get the talent? The talent is getting harder, right?
Talent is definitely, it's always a challenge, right? But we see a lot of at the commercial and the corporate and the sort of at the corporate level,
Yep.
a bit more what we call the legal, the risk compliance, right? A lot of professionals we see have spent a lot of time in traditional institutions,
Mm.
and they feel very frustrated.
Yeah, sure. That's a good point. They want to make changes, right?
They want to make change. They want to have impact. They see a fintech, startup
Yep.
like ourselves with a mission,
Yep.
right? With a very clear mission.
Yep.
And this mission is to help everyone, right?
Yep.
So I think they love that idea. So we do get very talented folk on board. At the engineering level, it's just amazing. The average age of our setup is probably sort of in the mid 30s. And we have very diverse
Yeah.
nationalities and talents. And I think that's so wonderful. I think Singapore, at some level, has created a very interesting hotbed of talent for that. There are some challenges. I do think that in the recent years, there have
Yep.
been questions about immigration,
Yep.
employment
Yep.
passes, and all of that. But we truly believe what we have is very unique and,
Yeah.
very fun to.
But I
work
think
in.
it's, Singapore's being pragmatic about the fact is that, the one job I wouldn't love to have now is a regulator. Why? Because so when I worked, I used to be a responsible officer for E-Trade, so you get regulated, and you only spoke to a regulator when something was wrong, right? The regulator called you up and you did
Yes.
something wrong. I didn't get called. Nowadays, you need to speak to a regulator the whole time. And if you're a regulator, it's so hard to keep up, right? People want licensed for token offerings, for blockchain, for robos, for payments. And of course, as a regulator, your job is to make sure nothing bad happens. But now, that was your job for the whole time. The last 10 years, your job is to keep up with innovation and to understand it all and to make the right regulations. It's difficult. And I think Singapore's struck this really good balance in that
I
whether it's
agree.
the Singapore FinTech Festival, whatever it is, this is not an easy job being a regulator now at all, because you can't just say no to everything because then nobody will come to your jurisdiction. Likewise, you can't say yes to everything because you don't know how it all works.
Yeah.
I think Singapore's kind of met that balance pretty well.
Yes. I think, if you follow Ravi Menon
Of course.
and you see what he's been saying,
Yep.
it's quite okay. So it's quite interesting. I was at this event, MAS event, a Green Shoots event,
Yeah.
and he spent maybe 20 minutes talking about cryptocurrencies,
Yep.
right? And he again repeated sort of warning,
Yeah.
right? Big
Sure,
warnings,
sure,
right?
sure.
No retail,
Yeah.
it's too volatile.
Yep.
Don't touch that. The rest of the day was like a half day event. Was actually spent on what is the digital asset ecosystem?
Yep.
What does that mean for Singapore? So he was trying to focus on dividing the discussion between what is cryptocurrency
Yep.
and how they may or may not regulate it, and across what is the digital asset ecosystem and the financial innovation that blockchain is going to bring or
Yep.
support.
Yep.
The press obviously picked up the
course.
piece about cryptocurrency because that's
Of course, that's what sells
controversial.
newspapers.
That's controversial, but and it lost, I think, a lot of the meaning, which I think where he wanted the industry to appreciate is he actually sees the digital asset ecosystem really encroaching financial assets and real assets, and where that eventually is
In the
going
end
to
of the
be
day, right?
Singapore's strategy.
At the end of the day, people want to be able to invest in a whole range of stuff. Whether what the technology is behind it. If you said to an average investor today, so do you know that your equities go through a clearing process? They're like, what's clear? They don't need to know. It's not their job to know, right? It's like, I don't know how Netflix works. I don't care. As long as I can turn on my TV and Netflix comes on, I don't care how it works.
Yes.
It's the same in, we've had the equity markets for so long and they work so well that a person can just invest. Whereas, and I think for private markets, whether it's blockchain or whatever and the digital assets, whatever is there, we've got to present to people the opportunity, like you said with REITs, to invest in whether it's buildings or art or funds or startups,
VC funds or
VC
hedge funds, right?
This idea that this is a whole other podcast that that VCs can monopolize that because if you've got 100 million to invest, you get better access, right? Why should a individual investor not get that access? I suppose that's what you're trying to solve for. So what's the vision? Like, if we're sitting here 5 years from now, 10 years from now, what does
Wow.
ADDX hope to have done? What do you hope to have done?
We want to put private markets, and I define that PE, VCs, hedge funds, into the hands of as many
Good.
mass affluent
That's a good
investors
thing to
as
do.
possible. We do have to accept the responsibilities. We do have to obviously be very thoughtful about
Mhm.
how this is being done, what we put on, how do we put out the necessary disclosures, how do we engage regulators in the right way uh, to make sure that the right products get into the right hands. So I think that's one. Whether we do it direct to consumer or we work with our banking partners or
Mhm.
securities houses to do that, I think that's where we want to see that year 5 really play out. An ecosystem in Asia, right, where investors can look at our website and say, "Oh, I want a KKR fund, or I want a Partners Group fund, or a Hamilton Lane fund,
Yep.
or an Apollo fund."
Yep.
Right, and I want that impact fund because I like what it's doing.
And whether ADDX is providing the technology and it's being distributed through other banks and exchanges, or you're going direct, it's solving the same problem, right?
Exactly.
Because banks are good at distributing, right? That's still a reality today, right? They still have that. In particular, you have a partnership with UOB and SGX, and they can distribute for you. So, do you mind which way it plays out? Like, it's both? You can go direct and go through your partners.
Yeah. I think direct is obviously for those who want to. Self-service requires responsibility and education, right?
Yeah.
So to be able to self-serve, I think the individual needs quite a lot of motivation to want to learn and spend time on it. Where I think banks play a big role is the advice and the financing piece.
Yeah, right. Okay.
I think that's still something that's not going to be that easy to disintermediate, right?
Yep.
And the idea is that a bank, a private bank, or a securities house generally has a better overview of the full portfolio. Because remember, we're only presenting alternatives, which are 20% of anyone's portfolio. So a bank that can then support the life cycle of a particular investor and say, well, you should do this or allocate more to this. Here's some financing, and most of that is obviously across the full portfolio. that I think is where the value add of banks and advisors still lie. So to us, if we can bring that education to the relationship managers, for
Yeah.
them to then sort of bring that education to their end investor, how does that add? How do private markets add to their portfolio? I think would be really, would take a big part of our mission forward.
That's a good mission. And we normally keep these interviews about 40 minutes. I think we're getting there now. So a question: do you think you're ever going back to TradFi?
No,
Because you're at UBS and Morgan Stanley, you've been at Real and
no,
Citi.
no, I
With the
could
new cool
not.
world of TradFi, you're never going back?
I think that fintechs and where we explore and where we want to create a new space, a new market, and we very fortunately work closely with the regulators to define that.
Yeah.
So is extremely inspiring to be able to do that. It's extremely inspiring to be impactful directly, and every decision we make has an impact very clearly and very quickly. I think it's very hard to step away and say, go back to the old world of doing
It
things.
is because, again, I'm sure you're very thankful for working at some great firms like UBS and Morgan Stanley. And I worked at like smaller firms like E-Trade, CLSA. I remember at the time, felt so fortunate to work there. Yet you see how the industry's changed, how the tech firms have become. And like, so I'm 55 and my friend's like, oh, you're so lucky working in a fintech. I'm like, hey, look, you still get the salary. Like I'm working at a fintech, right? It's and I think you're right. Like it is, traditional finance has got a harder task right now to attract talent. Clearly, they have money and capital to pay, but then, yeah, it's going to be really fascinating. Maybe, in at what point does fintech become traditional, right? Like, we're going to cross over. People are like, oh, you remember when we used to have clearing those days? And
Yeah, yes. As I say as well, the other 5-year vision is if I am still talking about tokenization, I will have failed.
because it should be just normal, right?
It should be just normal.
Yeah,
It should
yeah.
be part of the discussion. We're talking, we would be talking about already interoperability. We will be talking about, how do we we should be talking about T+0.
Yeah. I mean, okay, we over a coffee, we can talk about T+0, right? Because for all the listeners, if you're not into clearing and settlement, it'll mean nothing to you. But if you're into it, you know this idea. Like it's like you'll change the industry. It's like so clear to be able to do it. And I sometimes think we could just do it now if we wanted to but like, like you said, the exchanges are not built for that. The clearing systems are not, they're not built for that. You're right. Like there was a phrase, I don't know if it was in the 60s, some famous person, I can't remember who it was, Hewlett Packard said, I don't see the need for more than 10 computers in the world. I don't know if you've seen that phrase, or
Yes.
10 or 20.
Yes.
And there was another one I saw that was a prediction from the 1970s. I don't see how the internet could be useful. Like these kind of statements, and you just like look back at them, they're crazy. And and maybe tokenization, people are like, and who knows how it plays out, right? But you're right. Like if in 10 years we're still trying to convince people that tokenization's a thing, then it didn't fly, right? It needs to be just
Get on with the game.
correct. So I suppose for ADDX, you want to be able to say, you mean, of course you can invest in private markets. You mean almost like, was there a time that you couldn't? Like if you can
Exactly.
do that, that would be
5 years later, come on, we'll set the date.
okay, right? We'll be back here in 5. Well, look, thank you so much for coming on the show. I do get to ask you 2 completely random questions
Absolutely.
to finish off the show. But look, thank you for talking about
Yeah.
ADDX. I wish you all the best with that. I mean,
Thank you.
with the partners you've got, what you're building there, it'll be great to see how that's going. Okay, so I don't know if you've listened to WealthTech UnWrapped, but when we started the first show, just because I like to ask people questions, I asked the first guest a couple of questions completely randomly, and so we have carried that on. Okay, if you were allowed to represent Singapore in the Olympics for any sport or any activity, which would it be?
Tennis?
You're a keen tennis player?
I'm a keen tennis player. I'm not a good tennis player,
I did say if you...
but I'm a keen tennis player.
That would be great. Singles or doubles?
Doubles.
Who would you play with?
Federer.
You
He's
have
not
to.
Singaporean.
Yeah, well, he's not Singaporean. He's retired, right? You'll have to convince him to come back.
Yes. Let me think. I can't think of anyone else I would double with.
Completely separately. And again, it's theoretically my podcast. But everyone's podcast, we can talk about. I'm not a huge tennis fan, but I like tennis. But you watch Federer, like most sports people at some point make a mistake or take a misstep or their career goes off the rails or it doesn't. Federer just was as good as it gets, wasn't he? As a professional,
Yes.
just exceptional.
I do. There's so many of his clips right now on Facebook, right?
Yes.
Just because he's retiring and all that. I'm watching going, wow, if I was not impressed with him before, I just keep watching and going, he's so good.
He's a professional,
Yeah.
like at almost every level, business
Yeah.
level,
Yes.
brand
Yes.
level. Yeah, he could run a startup for sure. He would get it.
Yes. ADDX could be a Federer, think about the brand and the execution and the.
But it's a great point. I think for a lot of startups, that brand is so important,
Yes,
right? It's
yes.
so unbelievably
Extremely.
important. Okay, this is one of my favorite. I've used it before, but I like it. If Elon offered you a ticket on his ship to Mars for a holiday, would you go?
I would.
So you're one of the rare ones. Most people say they wouldn't.
Why not?
I would. So the overwhelming thing is, well, it's dangerous. We don't know if you're coming back. Like I didn't promise you that, right? You have to take Elon's word for that. So let's assume you come back. I don't know. I think maybe that's why you're a startup founder, because you're happy with the risk, right?
Yeah.
A lot of people are like, oh, I don't know how it will be. I'm like, that's the reason to go. Why would you go? Do you want to see Mars, or you just want to have the adventure, or you want to be on Elon's ship, or what?
I think all of the above, right? I think the mere fact that I would be offered a ticket, I assume that his technology for getting me from here to Mars would be relatively sound.
You'd hope so.
I hope so. And the idea of seeing Mars, I mean, why wouldn't one want to explore a planet that is not the Earth? Not that the Earth is not great, but just to see something else.
I'm with you. I'd be like, I'm going. I'm going to
Yeah.
go, right?
Yeah.
I don't know how long. That's going to be more than 10 years before that's normal, right? Before going to Mars is normal. If you're going to Bali or Mars, like, go to Bali. Maybe at some
You can
point.
go to Bali anytime. Come on.
No, but what I mean is in 100 years' time,
Oh, right.
would it be as common to go
Right.
to Mars for a
Right.
holiday than Bali? That's when we know it's really.
Depends if you get your sort of cocktails by the beach, right?
Yeah. I don't know if there's beaches on Mars. Anyway, thank you so much for coming on the show. I really
Thank
appreciate
you.
it. Thank
Thanks
you.
for having me.